You are listening to chartingwealth.com, and this training is how to use our trade worksheet. At the far left side of the screen, we have a filled out trade worksheet. We're going to go through how we filled this out, why we put down what we did, and we have a chart to the right to sort of help us follow along. Now, we're recreating this after the fact, so it's not as easy as actually doing it when it happens. So bear with me as we go through it. This is mainly to help you see how to use this trade worksheet. And a very important aside, this, in addition to your daily market and your weekly market worksheets, the trade worksheet is probably the most important thing for you to do all the time. As often as there is a potential trade or something you want to practice, and again, don't hesitate to practice stuff that you just sort of have a wild idea. Go ahead and try it. And I'm telling you, if you will write it down, not just take notes on the computer, but if you will literally write it down, put pen to paper, it will help you in so many incredible ways. Practice is what it's all about. The knowledge, the skill, your good looks, your smooth talking, that will only get you so far. Practice will get you all the way. So let's jump into how this, of course, at the top we have worksheet for what? QQQ. That is the NASDAQ 100. We see the entry price was 122.15. That, of course, was at 10:30 a.m. on Monday. It's always going to be a Monday when we're jumping in at 10:30 because why? We had a weekly vertical crossover occur on the 6th. That actually occurred on the 6th of January. So that following Monday, the two-day chart had preceded going up. And we'll go take a quick look at that two-day chart. It had actually preceded its up moves all the way back on, let's see here, if the charts are going to cooperate with me. There we go. On the 5th of January, followed then by the 9th with the weekly vertical crossover, which was, of course, our trigger to jump in. So that following Monday, we had the weekly chart going up, the two-day chart going up, and the 4-hour chart was going up. So at 10:30 after idiot hour, and we have good reasons for doing that. In fact, I will do a training soon on idiot hour. I have people ask all the time, and the quick answer is market makers have the authority to do a lot with price when the market first opens. And you have all these dummies that are putting market orders in, which means the market maker has a lot of authority to be able to set prices. So when you file something as a market order, you're going to be bought in it wherever the market maker at the beginning of the day says the market is. And again, if you want to protect yourself, always do limit orders. But what happens in that first hour or so, starting at 9:30 till about 10:30, the market is settling out. So we wait until the market is settled out, see where it is at 10:30, and if everything's looking good, 4-hour charts going up, two-day charts going up, the weekly chart, of course, is still going up, and the 30-minute chart, just sort of get a glance at it. If it's slamming down, then wait. But again, if everything else is looking good, that's your jumping in point. And we did that. We jumped in at 10:30. We jumped in right around 122.15. Now you can see on Monday the 9th, the price was as low as 119.92 and as high as 122.55. We jumped in about middle way. Well, we jumped in toward the top at 122.15. But again, weren't looking for absolutely the best time. Weren't going to wait forever. Everything looked decent. We jumped in at 10:30. We noted all that stuff down. And we also noted for us to be able to study later, for us to be able to congeal in our minds, and I'm telling you, it's so very important. We put down the reason. Weekly vertical crossover going up on Friday, 1617. We've already talked about that. Two-day chart also in an up move. All indicators positive for entry, okay? That was our reason for jumping in. Then we kept notes throughout the course of the trade. And then, of course, we noted the exit. We noted our profit and loss and the lesson we learned, which is probably the biggest thing. We'll get to that last. So let's talk about what happened throughout the course of the trade. Now we're on the two-day chart over to the right now, but let's look 131.17 Okay, that's the 31st, and maybe I should go to the daily chart for you to be able to see that a little better. Okay, so 131.17, we had pullback on 2-day candle, red spinning top, caution on the price percent oscillator. You can see that on the daily, and of course we'll zoom in on that on the 2-day chart. Yes, we see it right there. We had a spinning top, so the market had been rising that whole month, and then toward the end of the month, the market pulled back a little bit. We got a little worried. Caution, we noted caution on the PPO, it being flat. It was moving sideways. DO is losing energy for the first time since entry, so the derivative oscillator had lost some power, and we just noted that. Okay? We didn't get out. We didn't have a reason to get out. We didn't have a crossover going down. We were still able to draw a trend line. We don't have those trend lines left on this anymore, but still above it looks like the trend line, touching on it. But again, we had every reason to stay in. 2-day chart still looking good. Weekly chart still looking good. Maybe just a little pullback. Spinning top means indecision, so we questioned some things there, but we kept it going. Now, what was the next thing that happened? Well, on the 10th of February, we noted continued up movement in price, PPO and DO increasing in strength. Now, again, the 10th of February, we can see, yes, we continue to just have that, the NASDAQ 100 just flying up. So again, just made a little note to ourselves. Things are looking good. PPO's gaining in strength. We can see the derivative oscillator also gaining in energy. Everything is looking good. Just these candles are just spiking up, looking quite nice. Then we go to 224. And again, how often do we put these notes in? Whenever we feel like it. If there's something going on or things have been going really good for a while, we just want to sit there and note it. If we start having problems, as we see occurring, some concerns occurring first on the 24th, that was the first red open box candle that we had in 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's 18 days. That's pretty friggin' cool as far as up movements go. So what did we note on the 24th? Red open box, 2-day candle, PPO and DO heading down. That's a bit of a concern. We've made all this money. We don't want to lose it. We'd like to keep all that we could. Then we note on 3/2/17, and again, we didn't have a crossover. We just had, again, a pullback. What did we see happen on 3/2? Well, we noted that rebound on price, but PPO still weak and DO weakening. So we had some concerns there. We noted that. And then 3:10, crossover going down on 2-day chart. That concerned us, even though our price was staying up there sort of nice. We had some concerns that the PPO had crossed over. So what did we decide to do? Crossover going down on 2-day chart, near exit possible. We decided on the 13th to jump out of this trade. Now the 13th, why did we choose the 13th? Well, we saw the market gain back a little bit, but even with the gain on the candle, we continued to have the price percent oscillator in the negative. So what did we end up doing? We decided to pull the plug prior 2-day PPO crossover going down on 210. And we did. Now, could we have stayed in and ridden it up even further? Yes, but our indicators weren't telling us to do that. Our indicators were actually telling us, hey, we're losing energy. We're getting ready to flip over. So what did we do? We took our profit. Is it a problem doing that? Should we have stayed in and made every single penny? You know what? You can hold on way too long and lose everything. We had made an incredible profit, 7.5%, $9.18 per share over a period of just 63 days, just 2 months. So no, we were happy to close that trade and get out. And we were happy to have this sheet that allowed us to note everything we did, what we were thinking. With the exit time, we got it about 10:30. We watched where things were. Everything led us to believe that was a good time to get out. And then we noted our lessons on the trade. What were they? The PPO worked great on the 2-day charter as a reliable indicator of when to exit thanks to a strong uptrending market. Only missed out on a small amount of further up movement, but happy to do so with an amazing 7.5% gain in 2 months. This trade worksheet can come back to help you again and again and again, because you will keep one of these for each and every trade that you practice. And it gives you a record that you can sit back and look at. It also gives you notes all the way along as to what you were thinking. And if it's a trade that goes bad, or you had a really good gain and lost a lot of it, then you can go back and figure out, what was it that was happening that I didn't see? How do I Monday morning quarterback this? Is there something better I could have done? Sometimes there is, I'll tell you. Sometimes there's not. Sometimes crazy things happen. I mean, crazy things, wars, power blackouts, hurricanes, you name it, a number of things can come to haunt you. But for the most part, if you do things right, if you follow the charts, if you follow the trading rules, if you practice, these are going to work for you time and time and time again. Again, my friends, we're happy to be here to educate you. We're not a stock calling service. We're an education firm. If you want to know what we do, you need to subscribe to our channel. cw@chartingwealth.com is how you email us. If you want to go subscribe to our daily market review, what do? You just go to chartingwealth.com, put in your first name and email address. Everything is free. God bless, my friends. Thanks so much from your friends here at chartingwealth.com.